Thanks for tuning into India Market Close. I'm Niraj Shah with Tamanna, Inamdar. And the markets, let's pull up the Nifty. It's actually doing really well because relative to what we had thought at the start, that if banks and IT doesn't participate, then it'll have a problem. Now the point is, IT is actually not doing all that bad. We pull up the Nifty IT for you and just lay focus there. It's not all that bad, just about 0.25%, because it was anticipated that Wipro and the likes will really tank. They haven't done that. Infosys has. Wipro is in the green, so that's interesting. Nifty Bank is the other one that should come up on your screen and just show what Nifty Bank is doing in trade today as well. Well, there's a bit of green on the screen, 0.55%, 261 points up for the Nifty Bank. So good going there. And the market breadth and the advanced and the BSE and the mid cap and the small cap indices will also come up just to round up what's happening at the broader end of the spectrum, because clearly the last few days the mid caps and small caps have done much better. Not so today. The small cap 100 is flat, 14,848. Mid caps about 0.6% higher, so which is not too bad. And very interested in seeing what the market breadth is. Okay, let's stick to this and then we'll come to the market breadth. Now, what's happened here is very interesting. API companies, remember we spoke about this in the trade setup as well, that select API companies and pharma companies, the likes of Laurus, Divi's, etc. did really well. Divi's is the top gainer with 4.19%, strong showing there. And autos have had a good day all through the trading day today. So Hero MotoCorp is up about 3%, but there are others. Mahindra and Mahindra about 1.67%, so that's done really well. iShares is up 1%, Bajaj Auto about 1.25%. So autos by and large having a good strong move there. And Wipro is the surprise mover, up another 2%. Now there's no smoke without fire. There has to be reason that why Wipro was up 6.5% in Friday, and on a day when the Nifty IT is down in the red, Wipro is still up 2%. So something brewing there. What's not doing well? Bajaj Finance, and we'll talk about that, but the flashes were seen on your screen earlier as well. Could there be some impact on the credit card business there? And Infosys has kind of behaved well today. I mean, it started off weak, but since then it's just down about 1%, so it's actually recouped some bit of the lost ground. And just before Tamanna comes on, let's pull up the advanced decline ratio out here and see what the broader markets have done. Largely in favor of the advances, about 3:2 in favor of the advances. It was much higher, Tamanna, when we started off, but I think it's come down, narrowed down, but still in favor of the advances.
Absolutely. The overall mood continues to remain positive, and I think the kind of recovery that we've seen in IT stocks, is testament to that. The Infosys figure seemed very large and scary, but broken down, it's not perhaps so bad after all. But let's talk about some, buzzing stocks through the day, which have had news flow. I'm going to pull up Century Plyboard, which we talked about in the morning. They have opened up the largest wood panel manufacturing in Andhra Pradesh. Nothing much happening there right now. Godrej Properties has also come off its highs. They've sold over 600 homes worth 2,600 crores in their Gurgaon project. I want to talk about RBL and Bajaj Finance, something that Niraj was alluding to, and that story, we will have a more detailed report, but that's an important story to look at. So both these organizations have a co-branded credit card. They wanted an extension from the Reserve Bank of India for 2 years, but the RBI has given them a 1-year extension only, has asked Bajaj Finance for some clarifications, and RBL has said it's going to try and reduce its dependence on Bajaj Finance for these cards. So both of them seeing a hit today in trade, but we'll be getting a detailed report on that story for you. That's an important one to look at. Our stock of the day, J. Kumar Infra, what a run-up. And if you had watched us since the opening show, you would have known right up front that this is a stock that's going to buzz. CLSA has raised the target to 720 rupees. And you've seen that stock on Socket since this morning. So it's doing really well. We'll talk more about it and also play out for you a conversation with the management today to understand what their outlook is. I want to look at some of the new listings, and the newbies deserve a mention on this segment. And just as we saw this morning, Moti Sons Jewelers is the only one, and remember they had very dramatic listing interest coming in for their IPO. They've listed also well. They've stayed up about 88% kind of upswing for them. The other two, Muthoot Microfinance and Suraj, have not done too well, which is an outlier in a market like this. But but you will hear from all of their managements as well ahead in the show. So these are the big buzzers. Another one, I would say, Niraj, is BEL. Order wins for that company and a management that you spoke with a few days ago in detail.
Yeah, and sounds sounds confident, but doesn't sound overconfident, because they are kind of measuring their growth forecasts as well about what they will do, and which is actually a very interesting thing as well. So, maybe we'll try and get you what the management had to say, but 182 and counting, good going there for BEL as well. So good going for autos, good going for pharma, select pockets doing well. Let's get in Aditya Agarwala of Invest for EDU, and on the technicals. In a bit, we'll get in Chokkalingam on the fundamentals as well. Aditya, always good having you. Thanks for taking the time out. But on a day like this, Aditya, wherein it was anticipated that maybe banks and IT might have a slightly weakish day, but we are trading okay, about 0.5% in a low volume period is probably not bad ahead of expiry. How do you look at the charts and the derivatives?
Hi, good afternoon. Here's some of the show. Always a pleasure. So markets usually get into a lull phase. We all know that during this time of the year, volumes are a little low. FIs tend to book profits. But something interesting which is happening is some of the banks are taking leadership which had underperformed for most part of the year. To name them, Kotak and HDFC Bank, they're the top two gainers in the index, and they are taking leadership, which is very important. In fact, if you take a look at the top gainers on the Nifty, most of these stocks are the ones which had been big time underperformers, and they have started to take leadership in the index now, like Reliance Industries, Asian Paints, Divi's Lab, and Wipro, which is everybody's surprise. So most of these stocks which have been underperforming are taking a kind of leadership. So it also shows Neeraj that there's a switch from ones which have given decent returns to the ones which have underperformed for most part of the year, and maybe money is going to that part of the pocket. And looking at the index, I'm not too bearish, to be honest. In fact, I believe Bank Nifty can outperform from here on, and I wouldn't be surprised if you see another 1.5% gains in the next couple of trading sessions as we head to expiry. So 48,500, 48,700 is what I'm eyeing on the Bank Nifty, and I believe leadership will continue from the likes of Kotak, HDFC, ICICI, and Axis. Talking of Nifty, I believe watch out for three main stocks which will actually fuel the rally on the Nifty. It's the Asian Paints, Reliance Industries, and HDFC Bank. I believe these are the three stocks to watch out for in the Nifty 50 space, and I wouldn't be surprised if 21,500 is taken out decisively, though the derivative data still suggests that there's a huge open interest build up at 21,500, so that will still act as a hurdle, Niraj, but I wouldn't be surprised if that is taken out and we expire above 21,500 in a couple of trading times. Please.
Okay, so Aditya, just try to keep it simple and nail it down to levels, either for the Nifty or the Nifty Bank. Is there a target that you have in mind, let's say for the Nifty Bank until expiry?
Yes, Niraj, I do have a target, and I would be a buyer in the Nifty Bank with a clear support at 47,500, and I'm looking at a target of 48,000. That's the first target to play for as far as the Nifty Bank is concerned, heading into the expiry. Talking of Nifty, 21,600, 21,700, these are the two levels I'm playing out on the Nifty, with a good strong support at 21,400 on the Nifty.
All right, stay with us, Aditya, and I just want to talk a bit about stock of the day. We'll also play out a slice of that conversation with the management, J. Kumar Infra, and we talked about it in the opening of this show. It's up 20%, good report from CLSA, target of $720. Aditya, any view on the chart?
Oh, it's been an outperformer, Tamanna, and headed into an all-time high territory. If you already own the stock, definitely you would hold on to the stock. With a trading stop loss maybe at today's low makes sense. And the immediate target that I'm seeing on the stock is $650. If I would be a buyer at current levels after a 20% gap up, I'm not too sure about that. I'll wait it out. There can be another gap up tomorrow as well. Hence, I'm not too sure whether I'll get the stock, and even if I get a stock, I'll not enter at current levels because it's clearly sitting at extreme overbought levels on a shorter term time frame chart. So maybe a drop of 5 to 6% will give me a decent entry in J. Kumar Infra.
Where do you feel comfortable, creating positions in J. Kumar Infra?
I do feel comfortable, but only on declines, Tamanna, because at current levels, it is slightly sitting at overbought levels. So maybe closer to about 570, 575 will provide me a good entry opportunity in the stock.
Okay. Okay. Aditya, sorry, I'm just trying to understand. The pharma and chemicals is looking extremely active as a pocket. Are your ideas from that bucket, or are you recommending something else from a trade perspective?
Oh, no, I've got a pharma stock, Niraj. It is Divi's Lab, the top gainer on the index. It's a beautiful looking chart broken out from a downward sloping trend line. Also happens to be an inverted head and shoulder as we speak. In fact, I believe stock is making day highs. One can buy for a target of 39.40, and if that is achieved, maybe we can extend the target to 4,100 as well. It's a very strong looking chart, and the support on the downside is 37.60, so that will be the stop loss. The second stock is from the metals pack, because that is also doing decent, and I believe there are more room on the upside. So Tata Steel is something which is looking very interesting, Neeraj. So one can go ahead and buy at current levels, look for a target of 146 with a stop loss at 130 on the downside.
Sorry, Aditya, I missed out the stock idea. What is it that you were saying? The second one?
So the first, it's Tata Steel.
It's Tata Steel, okay. So you're recommending Tata Steel on the long side, I presume, and Divi's Lab on the long side. Not surprising there. That's done well too. Just a quick follow-up, Aditya, on Laurus too, because that stock too has really flared up in trade. But, the stock has flattened to receive a number of times. Is it prudent to go out and initiate fresh longs here? Or would you be circumspect on a Divi's and a Laurus?
No, Niraj. So given a choice between Divi's and Laurus, yes, I will stick to Divi's Lab because clearly the chart structure is extremely bullish there. But if I have to pick both, I would not mind picking both the stocks. I would be a buyer in Laurus Labs as well because clearly there is a trend reversal in Laurus and it provides a very good risk to reward ratio as well. So at current levels, one can actually go ahead and buy the stock, look for a target of at least 500 to about 550 on the upside with a decent stop loss at 400, 410 on the downside. So risk to reward is extremely benefiting Laurus Labs at current levels.
Tamanna, it's interesting today, just that one is, of course, Laurus, Divi's and what they are doing, but across the spec chem space as well. So alkyl amines, Balaji amines, there is Aarti Industries, Fine Organics, Deepak Nitrite for the last few days. So there's something happening within this spec chem / pharmaceuticals API segment that, and not just the last few days. I mean, if Deepak Nitrite is 2461. If you pull up the last 7-day chart or a last 1 month chart of Deepak Nitrite as well, for example, you will see that some of these stocks have had a really good run. But today in particular, all of these stocks are moving up in tandem. So something's afoot there. 1 month, 12% for Deepak. But across the board, I think we're seeing some bit of buying coming in.
Well, we're seeing a lot of buzz in this space. Another space or another stock actually, which has seen a very good run up today is Mazgaon Dock. And I just want to pull up Mazgaon Dock for a second and ask Aditya on his view on Mazgaon Dock coming in. So a bit of news a few days ago about orders they've got, large defense orders that they've got. And that stock has been doing pretty well, even 8% up today. But if I pull up the last 1 month, it's seen a fair bit of a run up at 2286. Does this look like it has an upside to you, Aditya? Do you look at this stock at all?
Yes, Tamanna, I have taken a look at the stock and definitely looks like a good buy at current levels also. In fact, the entire space, Cochin Shipyard, Mazgaon Dock, HAL, BDL, the defense space has been one of those where if you see a bit of a decline, people actually latch onto it. So same we are seeing in Cochin Shipyard and Mazgaon Dock. Talking of Mazgaon Dock, one can definitely buy at current levels, look for a target of at least 2,600 to about 3,000 on the upside, which provides a decent move. And another downside, 2,000 is a good support area. So Mazgaon Dock definitely at current levels of the Tamanna, one can latch onto it. Alternatively, people can look at a BDL or a Cochin Shipyard as well.
Yeah, Cochin Shipyard doing pretty well today as well. In fact, let's pull up Cochin Shipyard and look at it. That stock about 5.5%. 6% up. We'll take a very short break. G. Chokkalingam joining us on the other side as well as we get his view on the RBL Bajaj Finance story. We have a special report lined up as well, so stay tuned. All of that coming up. But just before we slip into the break, I want to play out this small comment from the management of J. Kumar Infra because it is the stock of the day, up 20%. Listen in to what they're saying.
In terms of the revenue for the Q4, I wouldn't say that it would add anything to it because the orders that we have bagged is mainly in Q3. So the top line to show the results would take some time. But yes, FY25 should be somewhat better than what we have expected and the guidance given by us for FY25. but it would be too early for us to comment on the real impact because it depends on how the project moves. So, but yes, going forward, the top line should be much better than what we are expecting. And for the new order books, I would say that we are still in the process of bidding for projects worth around 30 to 35,000 crores. So, in this coming 6 to 9 months' time. So I think even FY 24-25 should be a good year with respect to order books and the top line.
Welcome back. You're watching India Market Close, and we're looking like we're settling in for a pretty good close after a tepid start. All but the IT stocks and the IT sector is in the green. The bank Nifty up about 0.5% now as we speak. I want to welcome in now into the conversation G. Chokkalingam, a founder and MD of Equinomics. Welcome. Thank you so much for speaking with us today on NDTV Profit. Now, we started the day looking a bit shaky, flat, and the idea on the sense is that you're going to see low volumes in these last few days before, the year end. But are you seeing any clear opportunities present themselves right now, Mr. Chokkalingam?
Yeah, definitely. As you rightly mentioned, year-end, activity would become dull. But this year it would be an exception because retail investors are pouring into the stock market in unprecedented way. Last week also 12 lakh new investors have entered. So every week, anywhere 8 to 10 to 12 lakh number of new investors are coming in. So they may defy the logic or history, and still there can be a lot of action, in the remaining 1 week or 5 days of this current calendar year. And yes, as far as opportunities are concerned, I'm a little nervous about small caps. They have outperformed the Sensex and Nifty on an incremental basis anywhere 3 to 4 times if you take 2020 base or on year-on-year basis. That is, incremental rise in small cap is 3 to 4 times the rise in Sensex and Nifty, which gives me little worry because market cap build-up is so huge and valuations are highly stretched. So I find personally a lot of opportunities in the large cap, particularly Sensex and Nifty stock, and also top 250 stocks. So that is what research strategy we have been advocating to our own, the clients.
Which ones, Mr. Chokkalingam? Which ones in the small cap make you a little nervous, and which ones in the NSE and Sensex, in the Nifty and Sensex, do you see as opportunities?
Certainly, there are so many. I mean, I may be wrong. In 7 out of 10 small cap stocks, I don't find comfort at all. But if you ask me which one gives the confidence, certainly I can say that something like Explio Solutions because it has corrected a lot, and then Honeywell Automation, and then KCP Limited. I find this as a multi-bagger opportunity. Personally, also we are holding the stock. Its cement business is valued hardly at around $30 per ton if we take other business at replacement cost. And it also got a huge land bank near Adani port in Chennai. So considering that, I believe that KCP Limited would be a solid multi-bagger. As far as large caps are concerned, we have recommended Zydus Life Sciences, ITC, Britannia Industries, and HDFC Bank and Reliance Industries. These are some of the Sensex Nifty stocks. We continue to reiterate our high conviction.
Oh, you like the FMCG biggies, which everyone has been quite slow on. We'll come back and get a view on that on the charts as well. But I just want to pull up Polycab India and that news flashing on your screen. So the IT surveys are still on. The IT search is still under process at some plants and premises. Now, we saw the company, the stock, respond to this news over last week's trades, but today it still seems up about 0.5%. Aditya, any view on Polycab on the charts at all?
So Tamanna, last week after that news flow, stock did correct a bit and the structure did weaken as well. So on the upside, 54.50, 54.80 is the immediate resistance. Till the time those levels are taken out, I'm not looking at buying the stock. If you already hold the stock, maybe place a trailing stop loss closer to about 5,300. If that is broken, then stock can see a sharp decline on the way down, maybe closer to about 5,000 as well. So at the moment, I'll not trade the stock. If you already hold the stock, then you can put a trailing stop loss at 5,300.
Okay, stay on with us. I want to move on to another story, an important one, and details of those have become available just a short while ago. Sources to NDTV Profit have indicated that the RBI has raised supervisory concerns against Bajaj Finserv's co-branded credit card with RBL Bank. Both stocks have been down in the red today, but RBL more so. Mimamsa is joining in with more details. Mimamsa.
Yeah, hi Tamanna. So the RBI has raised supervisory concerns against Bajaj Finserv's co-branded credit card partnership with RBL Bank, and they have asked the NBFC to fix these issues and come back again for an extension. So for now, the RBI has granted only 1 year extension until December 21, 2024, which is less than what the non-bank finance company had sought for. So by the rule, the NBFCs to enter into a co-branded credit card partnership with the bank, they have to seek an approval for 2 years. And the last 2 year approval that Bajaj Finserv had received was in December 2021, which was due for pre-approval this month. However, RBL Bank will continue to issue fresh credit cards under the partnership, but it will reduce dependence on this partnership for new customer acquisition. So if you go back a little while, in November, the RBI had barred Bajaj Finance from lending under its e-com and Insta EMI cards due to violations, and the reason that they cited was violations under the RBI's digital lending guidelines, which was particularly about non-issuance of key fact statements. Now, what are key fact statements? These are details regarding the grievance redressal procedures, the recovery mechanism, and the annual percentage rate, and more such details. So the fact that they had not disclosed these key fact statements was the reason, under these two lending products, was the reason that RBI had barred Bajaj Finance from lending under e-com and Insta EMI cards. So even then, the regulator had said that they will review the supervisory actions, and after the company rectifies these deficiencies, they are going to come back again and seek for another extension for 2 years.
Okay, well, watch out for this. And, Bajaj Finance, in some fashion, also a bit of a pullback, if I'm not wrong, today. But RBL Bank, too, down about 4%. Aditya, thanks, Mimamsa, for this. Aditya, how do they look on the charts, particularly RBL Bank? It's out of the F&O ban, too, today, if I'm not wrong.
Yes, I believe Niraj, it's out of the F&O ban as well, and it's come to very important and close support of 257 for the stock. It's almost there. I'm not looking at going aggressive short on the stock after 4% decline. As I mentioned, it's very close to its immediate support. If in a day or two it actually finds the support closer to about 257, I would look to buy the stock because it offers a good risk to reward as well. So maybe place a stop loss closer to about 253, buy on declines, and you could again see levels of 290 to about 295 on the upside.
Chokha, any quick view on, the news coming in, as Mimamsa has talked about, impacting RBL as well as Bajaj?
It should be more negative for RBL Bank because, the tie-up with the Bajaj Group accounts for 60% of the total card issued. So, therefore, its dependence on this tie-up is more for RBL Bank. For Bajaj Finance, Bajaj Finserv, it is manageable. However, in both the Bajaj Finserv and Bajaj Finance, though the companies are great, they are good companies, valuation company is not there for me.
Yeah. Okay, we'll take a very short break. And we'll come back and look at what's happening in the derivatives segment. But it's looking like an exciting close to the day's session, and a positive close in any sense. So do stay tuned. We're coming back with a lot more.
All right, back with India market close right here on NDTV Profit. I'm just trying to see stocks that could be doing well, but remember, it's a pharma and a chemical day. I wonder if the FNO data also shows some bit of that, but Agam, of course, will throw perspective on the overall markets and then some specific movers as well. Agam, what is the afternoon looking like? Is it different, materially different from what it was looking like in the morning?
Well, not exactly, Niraj, but gains is what we are seeing, and perhaps these gains are a little more than what the market participants were working with. For now, of course, the Nifty is advancing by around 0.4 percentage point, and we're looking at a 13% increase in open interest, even as we saw unwinding last Friday to quite an extent, in fact. And well, at the moment, it does seem like there's been a little bit of position building for this week per se. This is as far as the December futures go in the Nifty. Let's talk about the Bank Nifty futures as well, and that's where we're also seeing an increase of around 14% in open interest, even as the index advances by around 0.4%. Remember, today is the Fin Nifty weekly options expiry, and it's the final one for the year, and where we are looking at a little more contraction in terms of premiums, and I'll talk about that in just a bit. But as far as your options space is concerned, again, considering the Nifty moved higher, we saw a little more traction around the puts, so a little more writing around 21,200, 300, 400 puts. Not too much to speak for. Otherwise, when it comes to calls, I reckon at the moment we are going to see a little more writing around 21,900 and 22,000 calls for this week. Of course, this is the change, and this is as far as the 500-point range that we are keeping an eye on when it comes to the Nifty. Even though the Nifty is very close to the 21,500 mark, we are still looking at that particular strike as the one with the maximum open interest in terms of calls. If we could pull out the Fin Nifty expiry as well, and there you have it. Now, we have only seen a large amount of traction when it comes to calls, not necessarily anything to do with puts. So in general, of course, we have seen consolidation in the Fin Nifty, since we haven't really seen too much change in terms of open interest, at least as far as this chart is concerned. So we're most likely to end exactly where it is currently trading at, and that's around the mark of 21,500 as well. Let's move on and talk about stocks then, and take a look at where we are in fact seeing a change in open interest, an increase there. So Lupin, Aurobindo Pharma, Torrent Pharma, all of them from the pharma space advancing and looking at longs, at least as far as Lupin and Torrent Pharma go. Aurobindo Pharma, on the other hand, looking at shorts building up. Godrej Consumers also looking at some longs coming through. And in terms of stocks which are seeing unwinding, we do have about a short covering for Atul, Polycab and Bosch. Remember, Polycab did see a sharp knock last Friday, and we're seeing a little bit of recovery, not too much, but MCX and Bata, on the other hand, looking at longs and winding. As far as the Fin Nifty goes, it's been a very quiet expiry, and this was perhaps on expected lines, but what we are also seeing is some longs building up for this week's Nifty as well as the Bank Nifty, and that perhaps can lead us to a question of whether or not we in fact can see these indices move higher through the course of this week.
Well, thanks for that, Agam. Interesting. If you are in a spec chem space, either like Atul, you're seeing some short covering, or you're seeing some long build up as well, build up on some of those stocks. But it's not just the derivative space. The cash market too is abuzz today with a clutch of mid caps moving around. Mahima is here with a list of those stocks which are the key volume buzzers today. Mahima, good afternoon.
Good afternoon, Niraj. So if we see the first stock that is buzzing in volumes is JK Kumar Infra Projects, which is trading at 11 times its 30-day average, and it gained almost 20% in trade today. And this is on the back of CLSA that has given a buy rating and has raised target price from 385 to 720. The next stock that I have on my list is Heritage Foods, and this is because this is buzzing in volumes because of a bulk trade that has taken place. Approximately 52,600 shares were exchanged in trade today, and the shares were exchanged at a price of 286.75. The stock has been trading since 6 days consecutively, closing at a higher price. The third stock that on my list is the Alkaline Amines. The stock performance, if you talk about, has hit an intraday of high of 9% today. The volumes are trading at 7.3 times its 30-day average, and the stock has jumped over 5.1% in almost 14 weeks. The next stock that I have is AstraZeneca Pharma. which is trading at 7.2 times its 30-day average, and this is recently it got a 14 crore demand notice from income tax. And the last one on my list is Gujarat Alkalis, which is trading at 6.9 times its 30-day average, and the stock touched an intraday high of 6.3%. So these are the volume buzzers of the day.
Well, for that, Mahima, some interesting names there. Just before I come to Mr. Chokkalingam, Aditya, a clutch of names out there, some in the chemical space, some otherwise as well, and including a Mazgon doc as well. Anything that catches your eye? Because the volume action too seems to be pretty strong in some of these stocks.
Oh, definitely, Niraj. And I believe Alkalamines and Balaji Mines and Gujarat, all three stocks qualify to be the top gainers list and buyers list as well. And I believe this space is turning around. You could see decent upside to top of Alkalamine at current levels. I might be a buyer. I'm looking on a target of 3,000 to about 3,400 on the upside. Little positional trade because stock is already shot up 9%. And on the downside, good supports at 2,300. So this is one space which is looking very interesting here. And I'd like to be a buyer in Alkalamines and Balaji Mines both.
Okay, we will watch out for those names. Now, Mr. Chokkalingam, long shunned for the better part of 2023, the spec chem and the chemical space is making a comeback. Do you believe in the fundamental reasoning for buying into any of these names? If so, why? If not, why not?
Yeah, I would be still cautious on Pitcom space because they are highly related to European economy. If you look back the historical trend in the chemical space, not only that, oil prices are down 18%, and that has pulled down the realization across the stream of petrochemicals. And third, if you take chloralkali, we all know that the realizations are poor because of fall in the realization from chlorine, and also there is a huge buildup of capacity coming up in the next 24 months. So there are a lot of negative news still there for the chemical space. So one has to be cautious. So one can choose, names like Tool, which is very well established, and also the stock has corrected a lot. Maybe if somebody is a very, very long-term investor, to some extent one can consider even Gujarat Alkali, but otherwise I would be very, very cautious in the chemical space.
I want to get your view, Chokha, on the auto space and auto ancillaries as well. And we've been seeing a buzz over there. We know come January there's going to be, price rises coming in. On the other hand, we know that there is a big IPO coming in the space as well, and we'll have more on that ahead on the show. Anything that you like particularly in this space despite all the run-up that we've seen?
Still, we like stock like a Maruti. I do understand that passenger vehicle sales are projected to be poor in January, but the saving grace is from the SUV segment, which is doing very well in the industry, and Maruti is also improving its market share in the SUV. As far as ancillary space is concerned, I would advise caution, except the tire sector, because the rubber prices are down, which is a key ingredient for synthetic rubber for tire industry. And also we have seen a huge buildup in the automobile population in the last 3 years, ever since we saw COVID. And now the capability for Indian individuals also improved a lot because of the stock market, even otherwise due to India's growth story, which means the automobile owners can also easily go for replacement of tires, which is the dominant market for the tire companies, because 70% of the sales happen to replacement. So in ancillaries, I would advise investors to stick to tire stocks and also big names like Maruti and Mahindra and Mahindra.
Okay. Now, there is one news flash that is on your screen, viewers, which is that Adani Green has approved raising up to 9,350 crores via preferential allotment of warrants. I believe this is to promoters, if I'm not wrong. So if it comes to about maybe between 6.5 crore warrants, important will be to figure out the price. I'm just trying to log on to exchange to try and see the whole nature of the announcement. But this after locking in that PPA, PPA, and this is the other important exercise that they've done. It's happened at a price of, I believe I read a price of 1480 or thereabouts. So this is an interesting development that's happened. We'll be, of course, watching out for whether there is anything else. 1480, the 6.31 crore warrants to promoters at a price of 1480. I wonder if there is some other other issue that has happened aside of promoters as well, and that is something that we'll watch out for. But let's wait and watch. For now, it seems that it is this, and they've also, board has taken on record the okay, fair call. So yeah, it seems to be the promoter Ardor Investment Holding and Adani Properties Private Limited to be given this. But it's a show of strength from the promoter end for sure. 6.31 crores shares. Warrants rather. Standard disclaimer. The Adani Group owns NDTV. You're watching NDTV Profit. Mr. Chokkalingam, come in. About 9,000 crores being put in by the promoters. And we know from almost every single entity in the green energy space that the growth targets are looking very stiff. So Adani Green has laid out some fairly stiff outlook there too. We were talking to Inox Wind today on the wind power side, and they are talking about some fairly strong targets as well. Do you like this space?
Certainly, yes. As you rightly put out, the future for India lies in green energy, because we can't keep spending around $150 billion for import of oil forever, the 2 per annum. And definitely, secondly, promoter putting in 9,000 crore is a big amount. One can't write it off. And therefore, I believe the stock can recover at least another 5 to 10% purely on the basis of this particular development.
About the charts, Aditya, out here, Adani Green, I'm not asking for the other ones, but Adani Green in particular, because this is where the announcement has come in.
So it's entered into a consolidation phase after a sharp move. It's not a bad looking chart, I'll be very honest. 1500 is a good strong support area. I could look to buy the stock and look for a target of at least 1850 on the upside. Offers a good risk to reward ratio, so it's not one that I'll ignore completely.
Time frame, Aditya, here? Sorry, one last question. I mean, 1800, what time frame?
At least a month or so.
Wow. But that's stiff as well. But it's just the quantum of money that is being put in at Tamanna. And today, like I said, Inox Wind as well, extremely buoyant about the kind of targets that are coming in this pocket. Absolutely.
The whole push on clean energy and decarbonization. I mean, if you even look at broadly, it's a bit of a stretch, but even J. Kumar Infra, that CLSA note, is talking about the government's decarbonization push and how public transport like metros is going to work into it, which is where a player like J. Kumar Infra comes in. So this is a theme that needs to be looked into with a lot more detail and where those opportunities lie. But let's just pull up that Adani Green chart, and you're seeing that kind of push up in the last couple of minutes of trade as well. But time for an interesting conversation, or a slice of an interesting conversation. Niraj spoke with Dinshaw Hirani of Helios AMC today, and he's bullish on large caps. He also believes that large caps will outperform small and mid caps. Listen in.
In October, the spreads between the 2-year and 10-year paper was down to around 10 basis points. And that's mainly because the 10-year paper got sold off. And as a result, the yields moved from some 3.6, 3.7 to almost 5%, right? And that's actually, there's a term for it. It's called bear steepening of the curve. So that was what was worrying us, because we thought that maybe the market is taking a view that the pain in the US is going to last longer. And as a result, the yields have moved up for the 10-year paper, and obviously the world has to live with the high inflation, right? But that got corrected in the last 2 months as such, and that's where the real comfort came from. That now it seems as if, and by the way, the dovish statements from the Fed also, I think, reiterated our view on the market, that they're also looking at cutting rates, probably going forward, probably in the second half of the next calendar year, which is CY24 I'm talking about. So it's obvious, and by the way, my belief is it won't be 3. It will be more than 3. And I think it'll be smaller cuts, because the Fed has to indicate to the world that things are getting back to normal. So maybe that is how it is. So that's why we are more bullish. And as I said, one big hurdle could have been the central elections, but that seems to be out of the way. And that's why we believe that even in the short term, by the way, one caveat out here, I think the large caps are definitely going to outperform the mid and small. That's what our belief is, and that's why our portfolio is leaning more towards the large caps.
That's a theme that we're hearing again and again, that the large caps are the ones that are going to show promise next year, and that's an important one to look at. I also had the opportunity to speak with Puneet Chatwal today, the MD and CEO of IHCL, who says domestic travel is going to drive demand ahead. He says that the nature of the industry and the Indian traveler has changed. Listen in.
In terms of foreign tourist arrivals, we are still not at even 60% or 70% of where it used to be. So it's a big opportunity, and domestic is definitely driving as India is seeing good GDP growth, good increase in per capita income. So I think that is going to definitely drive demand. And this, I would say, the new lust of the consumers to travel on longer weekends, which really started during COVID. So there is a shift in the customer behavior of people getting into their cars and driving off for a long weekend, whether they go to Uttarakhand from Delhi, or they go to Goa from the west, or they go to Coorg or Chikmagalur in the south, or in the northeast. So I think that is a permanent shift. This is not going to change. The second important factor is that because of the supply constraint, demand should keep increasing. And it is not just next year. I can say with a great degree of confidence that hospitality sector is at the beginning of an upswing for next 3, 4, 5 years for sure.
All right, we'll also look at what's happening with Inox Wind Energy, another counter that has been showing a lot of promise when we're talking about renewables. And in fact, it is in the focus. The stock hit a 52-week high after it bagged a 279 megawatt order. We spoke to the management on the company's order book and execution plans. Listen in.
As of 30th September, our order book was 1,276 megawatts. I think with this 280 megawatts of orders, it goes up to about 1,500 odd megawatts. I would say 33% of that is with public sector enterprises. And I would say about 50% of the order book is broadly with C&I and IPPs. And maybe about 10 to 15% is with smaller retail captive consumers.
Got it. And this large number now keeps you in good stead for executing, say, circa 350 odd megawatts in the balance in the second half of FY24, and maybe 600 odd megawatts for FY25, because I'm presuming that was what the earlier guidance was, if my memory serves me right.
I think so. I think, God willing, we should be far stronger in FY25 and 26. We're not updating any of our guidances at this point in time, but once we get into, once we get done with Q3 and we're in Q4 of this financial year, we may look at upping guidance for FY25 and 26. I think with respect to the current period, I think we're well on track with respect to some of the financial guidances we've shared with the markets.
Got it. So 500 megawatt for FY24 is a given. You may up the guidance for FY25. I don't want to force you into kind of doing that right now. Is that a fair assessment?
That's right. That's right.
Okay, great. Have you started the 3.3 megawatt turbine supply already? And is it showing promise in terms of how much it improves internals? I know it's early days, but are you happy with what's happening, if it is happening right now?
No, yes, we did commit that we'll start production and supplies from Q3. And I think, yes, 3 megawatt production has started. It's going on as we speak. We have multiple molds which have come in to our plants. So blade production starts as well. I think we're well on track. And I think with respect to, the current order obviously is very large. And we've had a couple of other orders from NTPC and a couple of other private sector enterprises. And I think with the kind of inflow discussion going on and our pricing and costing, I think we're very, very confident with respect to achieving the guidances we've set out in the public domain.
Well, everybody on green energy is sounding very, very confident, and Inox Wind is no different either. So we've spoken about Adani Green, now look at Inox Wind as well. Extremely strong commentary thereof. Mr. Chokkalingam, have you studied Inox Wind by any chance, or Inox Green for that matter?
Yeah, I studied both Inox companies. I would prefer, rather buying Adani energy stocks than Inox group company stocks.
Okay, so Mr. Chokkalingam doesn't quite like Inox Wind. It's rallied very well. Aditya, is it now close to peaking out, or is the rally looking strong enough for it to continue in Inox Wind or Inox Wind Energy?
Looks very strong, Niraj, to be honest. Stock is up 320% this year. I think so. It's crossing its IPO price now. And if it crosses that all-time high of about 470, I believe there will be definitely more room on the upside. And I'm looking at a monthly chart, Niraj, extremely positive-looking chart with high volumes. So somebody's buying into the stock for sure. At current levels, I would be a little skeptical, maybe on 3 to 4% or at max 5% decline. I'll look to buy the stock and a target of 550 to about 600 on the upside.
Okay, just before you ask Aditya his top idea, Tamanna, I must tell you, the other stock is Inox Wind Energy. So you've seen Inox Wind, which is 463. Pull up Inox Wind Energy as well, IWEL. That stock is about 5165, right? Now, there is a swap between Inox Wind and Energy because there's a merger. The swap ratio is, if I'm not wrong, 158 shares of Inox Wind for 10 shares of Inox Wind Energy. At current prices, the swap has a 37% arbitrage.
Wow.
So if you effectively buy 10 shares of Inox Wind Energy, it will cost you whatever, 51,000.
Yeah.
158 shares of Inox Wind will cost you maybe 71 or thereabouts. So there is a 38% arbitrage because eventually the companies will merge. So either Inox Wind prices will come off or Inox Wind Energy prices will move up to close out that 38% arbitrage as and when the merger happens. But even if it happens 1 year out, 1 year, 38% arbitrage. It's pretty strong.
Yeah, but we're seeing a decent move in the stock today, and perhaps more and more people are figuring out that arbitrage opportunity.
Yeah, who knows? But it's very interesting.
But green energy is the flavor of this afternoon, and I just want to go back to that announcement that Niraj was making to the exchanges, the Adani Green story that you're seeing on your screens right now. It's significant because of the amounts that are part of it and the warrants that are being issued. It's an issuance of warrants to the promoters of AGEL for a quantum of 9,350 crores at a per share price of 1480.75. And so that is the important part. It's showing the confidence and the backing really to Adani Green. And there is a quote as well of Mr. Gautam Adani, chairman of the Adani Group, that I'll just put out. He says, India is on the cusp of becoming a global leader in renewable energy, and Adani Green Energy is in the vanguard of this revolution. He goes on to say this investment by the Adani family underscores our commitment not only to making our nation's clean energy dream a reality, but also to an equitable energy transition where we phase down traditional power sources while simultaneously phasing up green, affordable alternatives to fuel our accelerating growth and development plans. Now, of course, the standard disclosures over here, standard disclaimers that you're watching this on NDTV Profit, owned by Adani Media. But what I find important over here is look at the whole line of companies and old economy companies, Niraj, which have recently actually put out dates of when they will be moving completely to clean energy to fuel them. Cement makers, manufacturers of coal, miners, all of them. So this is what is coming. Now, to speak about renewables as a space up in the air is fine, but this really shows that you're willing to back it and that you see the upside there.
And for the Adani group of stocks as well, Tamanna, one remembers that when at the peak of the Hindenburg issues, news flow, the Adani family sold stake to GQG and raised liquidity. Now, if the family is putting in not chop change 500,000 crores, but 10,000 crore rupees to work in Adani Green, it probably makes the market believe that the liquidity issues are certainly behind. Now, Sajid studied the Adani Green business in great detail, and he joins in right now to talk about this particular development. Sajid, what else do you have? What we know right now is 6.31 crore warrants via preferential basis.
That's right. Niraj, if you look at the pricing which has come for this warrants, it's based on the SEBI pricing, which is 1480.75 per share. That translates into 9,350 crores, which has been invested in form of warrants by the Adani promoters into Adani Green. It also follows a $300 million investment coming in from Total and Energy of France. Now, Total is one of the investors in the company, and this investment was expected. It got delayed a bit because of the kind of noise which was there in the last couple of months. But now it seems that the entire, the cycle of investment into renewable is back with this investment coming in from the family, which is at 1480, and Total also is part of that thing. So nearly $1.4 billion of fundraise that is coming in for Adani Green. To put it in perspective, in January or so, we saw GQG first entering into Adani Green at 504 rupees, and that compared to today's 1480 gives you a good indication about the kind of backing that the promoter is willing to do on its renewable energy foray, where it expects to reach 45 gigawatts going forward in next few years. So yeah, it's one of the biggest deal coming in from the renewable space, with promoters and Total putting in their mind to take the investments in Adani Green.
Thanks for that, Sajid. Again, standard disclaimers, of course. The Adani Group owns NDTV. You're watching NDTV Profit. But Aditya Agarwal's call on Adani Green for now is already in the money. Now, Aditya, before we let you go, of course, your top closing strategy, and just a word, it's of course risen quite a bit strongly today. I know you mentioned about 1 month time targets of over 1800. You reckon this near-term move also could be positive?
Yes, definitely, Niraj. Immediate target, if I have to play with, could be 1700. And we all know, Niraj, Adani stocks, when they move, they usually spike up 10 to 15 or 20% upper circuit. So it's not a big deal for the stock to actually hit 1800 in no time. If somebody has to play immediately, then 1700 is a target that I'm looking at. Coming to stock ideas, I am looking at the stock Castrol, Niraj, and last 2 trading sessions, stock has actually done phenomenally well for itself. And look at the volumes in the stock. It's massive. I've not seen this kind of volume in the stock for, I guess, months. Or last this kind of volume I'd seen was 1998 in the stock. So Castrol is something which is looking very interesting to me. But it's not a trading bet, mind you, it's more of a positional buy. At current levels, I would be a buyer in the stock. Also on declines, I'll be a buyer. I'm looking at a target of 240 to about 260 on the upside. It's a big target, I know, but this is something which is looking very interesting, and one should place a stop loss note at about 160. So Castrol is something which is looking very interesting to me. And then if I just move to a yearly chart, Niraj, after 2014, this is the first year when Castrol will close with this kind of gains.
Thank you for that, Aditya. Aditya's BTST idea is Castrol. G. Chokkalingam is with us. Just as we go into close, your thoughts on your strategy for tomorrow and anything which is on top of your radar?
Yeah, I would suggest being a long-term investor always. 2 stocks. One is the KCP Limited, and second East India Hotel. In the East India Hotel, both Reliance and ITC have stakes, considerable stakes. That gives me a lot of confidence. These are the 2 stocks I would consider as a great wealth creator in the long term, and we personally hold KCP Limited.
Okay, remember KCP, a mix of sugar and cement, and East India Hotels, right? So watch out for both of these names. Let's wrap up the markets, then come back and take in final thoughts from both our experts. But very quick market wrap. Good strong show by the Nifty 50, 100 odd points. Just pull up the heat map very quickly, and let's just see if the components have changed in the last 1 hour. No, Divi's has strengthened, Hero has strengthened, but at Adani Enterprises, courtesy, I believe, this move that happened in Adani Green, Adani Ent also has moved up to the top of the list, so 2.3%. Not too many changes in the losers list as well. So largely the same set of stocks. Has Adani Ports reacted? No, not as much. But Adani Enterprises certainly. And remember, by virtue of the fact that it's the mothership, the holding company in a lot of businesses, I think Ent tends to do well. So that's the long and short of it, that the heat map is showing a lot of optimism today. And while the Nifty 50 shows just about a 0.5% uptick, and the small caps aren't showing too much of a gain, the mid-cap space has got a lot of strength, particularly in the pharma and the specialty chemical space. Now, before I hand it over to Tamanna, just bring up the intraday price move of Adani Enterprises as well, and let's see if the stock moved up just around the last half an hour. Or not necessarily the last half an hour, but you see the spike here, and I think that's come after the Adani Green announcement came in. So there is clearly a bit of a follow-on effect that's happened into some of the other stocks as well. So the markets have shut, but Tamanna, the broader end of the spectrum, a lot of movers there.
Yeah. I just want to talk about Castrol, which was actually the BTST idea of Aditya is up 13% today in trade. NLC also doing very well. Alkyl amines, another stock that we had spotted, and my colleague Varsha had done a piece on it earlier today. That's up about 12%. Balaji amines. Cochin Shipyard is another one, and also let's look at Masgao Docks as we close and look at where they have closed. So these are some of the winners of the day. On the losing side, RBL Bank, Bajaj Finserv, but more than Bajaj Finserv, RBL Bank likely to be hit by the RBI directive and scrutiny on its co-branded credit cards with Bajaj Finserv. RBL depends on them for about 60% of their cards business, and they have to reduce that dependence, so that's a problem for them. Manappuram Finance, Nippon Life, all not having a good day, nor is 197. Let's just look at how Paytm closed out finally after those reports. I mean, they did say that they have trimmed down on staff. The reports number it at about 1,000 people. That's stock about 2% down, and they say it's because of how efficient AI is, but it's not done too well for them. PVR Inox, again, 2.5% down. Is that Donkey Blues? I'm not so sure. But those are some of the stocks that have not quite fired. What's done well? Realty having another good day, despite all of the run-up. So you have some counters like Macrotech, Godrej Property, which are doing decently today in trade. Some of the list of stocks that have been in the news, and of course we've spoken quite a bit about Adani Green already, but J. Kumar Infra, definitely, JSW Energy, UPL, Century Ply, all of them pretty well. Just let's look at how the three newbies closed out in trade. Moti Sons Jewelers is the only one that's walked away with some profits on the table for those who got allotment. But Suraj Estate and Muthoot Microfinance have not had a great showing so far in trade. So those are some of the big movers of the day. But all in all, I would say a good day of trade, Niraj, on perhaps not as high volumes, perhaps some money sitting on the sidelines, but definitely the overall mood optimistic, and those with positive news flows reacting in that sense.
Most certainly, and it's just been a splendid ending for almost everything that had even a whiff of positive news. You have to admit that. Now, Mr. Chokkalingam, I heard you with interest talk about two names. East India Hotels, the story might be well known because a lot of hotel stocks are doing well. Tamanna today was talking to Indian Hotels, and those stories compelling. Why KCP? What's the rationale?
Yeah. This stock I've been tracking nearly for 3 decades. Of course, that doesn't mean that I will be right. It's more of a deep value hidden in the stock. Now, this commodity-oriented stock company has become a net cash company in the recent time. That is our first, argument in favor of the stock. Second, the management is good, a very highly ethical management. Third, the promoter has expired recently, and now only 2 ladies are managing the company, and they have got a minority stake in the company, about 43-44% stake. Now, if you see the non-promoter holding, there is a lot of concentration by HNI investors. So that also gives me a hunch whether there could be any action which can happen in the stock. I'm not forecasting it, that's my purely perception. And fourth, this is the only company which has got a most profitable sugar business outside India. It has got a sugar business with 11,000 TCD in Vietnam, which has been making a phenomenal money most of the time ever since it became turnaround after setting up the plant long ago, and it transferred the money to the parent company here substantially, and it makes about 150 to 200 crore profit every year. Now the global sugar prices are up around 25% year-on-year basis. And then coming to cement plant, it has got a 43 lakh ton cement capacity, and it recently got a limestone capacity license extended for another 30 years. And this is the only company, in my limited knowledge, to have all 5 sources of captive energy: thermal, hydel, wind, solar, waste energy. All the 5 sources of energy this cement plant has got. And then it has got a hotel business, which has recently turned around in Hyderabad. And also it has got an engineering plant in a place called Tiruvattiur in Chennai, which is very close to Adani port. And it has got a huge land bank with a railway line, which is a very good opportunity for anybody who is thinking of, considering the logistic facility. And this present management itself can convert possibly into a logistic. Now, if I do SOTP of, the land bank, hotel, and sugar, at the replacement value, the sum of these alone is equivalent to the current enterprise value. Almost the cement plant is valued free by the market. So, or even if I conservatively reduce the valuation for other businesses, in my calculation, the cement business doesn't exceed more than $30-35 per ton. Whereas we have seen a lot of acquisition in the range of $80 to even $160 per ton. So that gives me a lot of comfort. Even if any possible acquisition doesn't happen, it has got a deep value. It can turn around cement and it can reward the investor. It is also known for this management rewarding the investors.
All
so
right.
that is the argument in favor of KCP Limited.
All right, strong argument there. Thank you so much, Chokkalingam and Aditya, for joining us today on India Market Close. And, as we wrap up a good day for the markets, we turn our attention to a big story, which is actually come over the weekend. Electric scooter maker Ola Electric is set to raise 5,500 crores through a fresh issue. The total size of the IPO, of course, is around 7,000 crores. My colleague Sajid Mangad and Hiral Tadia are here to break down the details of what is being planned. Hiral, what are the key questions being raised on this much-awaited listing?
Absolutely, a much-awaited listing. And if you see in terms of the auto sector, it's one of the first companies in 2 decades, a new one that is getting listed. Now, whether you call it a new kid on the block or a new grown-up on the block, that is something that we need to wait and watch. But Sajid, overall, 7,000 crores is what we're looking at. How are they going to utilize the funds and what do the valuations stack up?
So, the entire breakup of the IPO is going to be in form of a fresh issue and the offer for sale. The fresh issue comprises of 5,500 crores. That includes the 1,100 crores of pre-IPO placement that will happen before the RHP is filed. That means early next year, whenever the IPO is coming in, that's just before that. But there is a 9.5 crore shares of OFS, which includes 50% of that is coming from Bhavish, who is a promoter of the company as part of the OFS. And based on the calculation that we have done, it seems to be that that OFS will be around 1,400 odd crores. That takes the total valuation to close to 7,000 odd crores there, which basically means that at 144 rupees a share, after all the CCPS is converted and the shares are fully diluted, the company would be valued at around 59,000 odd crores, which is $7 billion. So between 140 and 144, it's between 6.8 to $7 billion of valuation that's coming for Ola Electric Mobility.
Right, and this does tell you any details in terms of how the shareholding pattern will change in terms of pre as well as post?
So as per the DRHP, promoters which includes Bhavish, ANI Technologies and Indus Trust, they currently own around 45.14% on a fully diluted basis. Public, which includes all the investors, which includes SoftBank and Matrix and other investors, hold nearly 47%, and there is little, and the employee trust owns over 7.6% in the company. Once the IPO comes in, which is 5,500 crores of fresh issue, and OFS happens, the promoter stake is going to get diluted to 39.6%. The public will be holding roughly around 53.4%, and the employee trust will be holding somewhere around 7% in the company.
Right. Now, this takes me to the next part of it, Sajid, is in terms of the EV penetration in the country, right? From what data is suggesting is that the penetration in terms of two-wheelers is much more versus penetration in terms of four-wheelers. And if that is the trend that is expected to continue, how does it augur for Ola and if it augurs well for an Ola, which are the regions which are driving this growth?
So you need to look at the penetration from a point of view that EVs as a category has been growing since last 5 years, 2018 onwards. And Ola is relatively new in this business because this first operations began only in January of 2022 after when it started selling its S1, Ola S1 Pro to all the customers there. So, from that point of view, Ola's his financial history as well as operational history is very limited to the nearly two odd years which is there. But look at the penetration of EV two-wheelers. They are currently at 4.5%, and that is of FY23 I'm talking about here. And for EV four-wheelers, it's around 1.2%. All two-wheelers have been growing at a much faster rate, and that was primarily because they had that benefit of FAME subsidy which was coming in, though the subsidy has been pruned down and only 2 select models of Ola will be getting that subsidy, but it's still a push for that entire electric vehicle part. And what is expected is that by 2028 or fiscal 2028, nearly 50% penetration would be achieved by electric two-wheelers, which basically means it's a big, big runway for many of the players, including Ola, going forward. And the drivers of this is primarily coming from some of the tier 2 and tier 3 cities like Kolhapur, Surat, Ajmer. These are the kind of cities where we have seen a lot of penetration coming in. Like Kolhapur has nearly 23% there. Surat has 15, Ajmer has 13, and in some of the states like Goa, the penetration is as high as 16.6%. Maharashtra with 10%, Kerala, Karnataka with over 11% penetration coming in. So the penetration is largely led by two-wheeler to tier 2 and tier 3 cities for electric two-wheelers here.
Absolutely, that's what your data is pointing out too. Now with this, where does this take Ola's market share, and what's the kind of run rate that is expected, because they are the leaders, right?
So, Ola has been very aggressive in marketing its scooters, and scooters are doing well as well. If you look at the total EV sales that happens on a monthly basis, they have around 30 to 35% of the market share which is coming in. They had the sales of 1100 in January 2022 when they started the production initially, and then it went to 30,000 just in November, because 29,900 odd shares that was there. Now if you look at the average, it's for FY24 it's coming to 22,500 per month which they are doing it. We assume that next 3 months they will be doing 24,000 for every month, Jan, Feb, March. So you're going to hit somewhere around 2.7 lakh units of sales for Ola alone, compared to 1.5 lakhs in FY23. That's a 73% jump in unit sales that's coming in from Ola alone.
Right, so when you're looking at 2.7 to 2.8 lakh units in FY24, the financials, if we watch out for that one, what's interesting to note from the financial perspective is that the per unit cost of Ola is getting expensive. If you see the graphics on the screens as well, clearly an increase in terms of the revenue per unit, right? And secondly, the revenue is almost doubling. Now, first question coming to you is the revenue per unit, what's the reason for that to increase? And secondly, is the revenue increasing mainly on the back of that factor, or are there other factors at play?
So the P&L of an electric vehicle works totally different from an ICE vehicle. Nearly 25% of the total cost is on account of their battery and the battery management system. Now, battery prices have been coming down in the last 12 to 18 months, and that's a good thing because that brings down the cost for them, and that's been reflected in Ola's total cost of goods consumed. If you look at FY22 and FY23, that's where the financials are available. 85% of the revenues was accounted by cost of goods consumed. Now, in first quarter, it came down to 76%, which basically means that there is an operating leverage which is also playing at here. If you remember, Ola is also building gigafactory for cells, which it has a PLI for 20 gigawatt hour factory with spread over next 4 years. The first gigawatt should come in operationalized by FY25. Now, when that comes in, you're going to have some more better leverage coming in with respect to cost, because the cost is expected to come down by another 20 to 25% as it happens. If you look at what I say here is revenue per unit, which was 1.6 lakh, it has gone to 1.76 in FY20, will go to 24. It basically means that the mix of the product is much in that Ola S1 Pro, which is an expensive product, is going at a higher price as compared to Ola S1X, which is at 1.2 and 1.4, and starting level is 1.2 for that. So the price per unit, they've been able to sell much higher valued unit, and that's what is reflecting here. And based on that one, when we calculate, because Ola's revenue recognition is based on when it delivers to the customer and not an X factory when it goes to a dealer. So based on that, what we're projecting is that with 2.7 lakh units in FY24, the revenue is expected to be nearly 4,790, and gross margin of 10% is 479. It will still be making an EBITDA loss, and it will still be making a PAT loss in FY24.
So my next question coming to you, Sajid, on this is, when does Ola hit profitability? Because that's what is going to be absolutely key as well, right? As to what are the parameters that you would be considering, and which year do you see Ola hitting profitability?
So there are a couple of factors which are in play. One is the Ola Gigafactory coming into operationalized, so we don't know the cost structure of that and how it's going to play. But let's keep that aside and look at the two-wheeler space itself, how the two-wheeler is looking at. If Ola is able to sell, say, 3 lakh units in FY25, and it's able to bring down the cost of goods consumed to below 70%, which it can, because it will have its own, batteries and other stuff coming in FY25. We expect, the calculations say that they can make an EBITDA positive and a PAT positive in FY25. Given the fact, I'm again putting everything here, that Ola Giga factory has to come into play, and we don't know the cost structures which is going to happen, and there is a constant capex which is coming in, so you will have a good amount of depreciation and other amortizations coming in for that build up of the Giga factory, which has to be done in next 4 years.
Right. So the Giga factory at play, in consonance to that, the 3 lakh number magic, the 3 lakh unit magic number, and number 4, cost efficiencies that come in. All of this have to work in tandem for a FY25 to be profitable. And with that, if you have to look at valuations and compare it to the other ICE traditional two-wheeler players, where does it stand?
It's some would say that it's unfair to compare both of them, because one is ICE and one is electric vehicle. But the ICE companies, both Bajaj, Hero Honda has gone through an investment mode into Ether. Bajaj is coming out with its own, and TVS has its own. So while the volumes are not big enough, they are still in the early phases in electrification of two-wheelers there. But having said that, because all 4 will be two-wheelers, we are looking at, based on brokerage estimates, the market cap to sales multiple. We have Hero Moto at 2.2 times, Bajaj at 4.2, TVS Motor at 3.1, and Ola Electric at 12.3. So it's still very expensive in that sense. So what we need to be very careful here is that, of course, the path to profitability is one, and secondly, how the market is going to now look at EV players going forward, because that's something which even some of the other players like a Mahindra or a Tata Motors are also looking, because they're also going for an asset light model for the EV operations, and their operations have been also valued at close to $9-10 billion in that sense. So, so that play out is going to happen, and how Street is going to react to it is something which we will
absolutely watch. And with this now, whether the analyst will also look at some of the parts and divide it between electric and non-electric and give a valuation to the electric portion, will will be interesting to watch out for. But this is a complete roundup of Ola Electric. Clearly, from a valuation perspective to what the funds utilized are going to be used for, where is the growth coming from, and when will Ola Electric actually turn profitable? We are looking at a magic number of 3 lakh units, and in financial year FY25, taking into consideration the